Hello guys, um, I'm here to talk about the market cycle, and I'm also here to show you guys how to use Fibonacci retracement and extension levels in the market on any currency pair you're trading. So here is the Hero USD chart. Okay, first of all, what I'm gonna do is I want to show you guys how the market cycle is, how the market moves. I want to show you how the normal market and how we are going to use this in the actual real-time chart. So let me just play this first. Let me just take this out first. Bring in my tool. Okay, when you are on a downtrend, when the market is on a steady downtrend, so this is how the market goes. The market makes what we call a low right here, and pull back. This pullback is not this pullback is not this pullback is kind of like maybe some people got up out of the market at this area right here, and the market makers do not have anything to do with this pullback. We all know the market is on a steady downtrend, right? So this pullback are maybe the retail traders trying to move the market, trying to trade, trying to counter the trend, so they pull the market back to the upside a little bit, and then we now experience what we call a correction to the downside. This is where the market makers, big banks, hedge funds get into the market again. On the correction, the market was on a steady downtrend, so retail traders came in, those with emotions and things like that. Some people took their profit from this level right here. Some people took their profit from this level right here. So um the market makers went out of, maybe they went out to have some holidays, or maybe some kind of like a break, so they don't have any hand in this movement of the market. This one is influenced by the retail traders, robots, and some other things like that. People that are trying to buy from the low, trying to buy from the low, maybe, or some quick scalpers. There's so many people involved in the market all over the world. So some people who are buying the market there, and then maybe their stop loss is gonna be right here below. Their stop loss is gonna be below their entry point, below the body market. So and when it's time for the market to make its normal correction, the market makers get in the market. The market makers get in, the hedge funds, the professional traders, those who knows how to trade the market, for they get in on the market, and move the market to the downside. You know, those people who bought Euro USD, let's say, and this is the actual Euro USD currency pair, and those retail traders who bought Euro, their stop loss is just gonna get hit because they bought the market and the stop loss was up somewhere, and some of them don't even use stop loss. Some of those retail traders, they don't use stop loss because they are new to the market. They don't know what's happening in the market, so they just feel, oh, the market, maybe RSI is showing oversold, RSI is showing overbought. It's time for the market to correct. It's time for the market to go up. So they try to buy the market to the upside, and and we all know, the professional traders know that the market is in a steady downtrend. That all you're looking for is a sell setups. All you're looking for is a sell trade. All you're looking for is a sell trade. Whenever you're trading the forex markets, you always want to choose the best side. Is either you choose the bulls or you choose the bears. So if the bears are in control of the market, you always want to be on the safer side, right? So you don't go You don't go, so you don't choose the bulls. You don't choose the bulls, but you choose the bears. So some traders who have little or no idea about the market, they buy the market thinking the market is gonna rally up due to the fact that they have seen some traditional indicators signaling them that the market is going up and some stuff like that. But the professional traders know what is gonna happen. They know what is gonna happen in the market. They know that this is just a normal pullback and they are waiting for the correction. So when the market makers step in again, they move the market to the downside and clearing everybody who bought the market, clearing all the retail traders who bought the market, people who have little or no idea about what happened, or what's happening in the market. So they cleared them out and they blew their account and things like that. Some of them don't know how to use risk management and all of that. So the account was cleared right here, and they complain about forex. Forex is so risky, this and that. I can't. Stuff like that. Some of them give up. Some of them study. They try to get it the right way. They try to get the right way, and they try to learn the right way, and they become professional traders. A lot of them, even the professional traders who are even currently the current professional traders, or maybe the traders who are professional right now, they were once a newbie. They were newbies too. They didn't even have they had little or no idea about the market, but they decided to learn. That they decided to learn how the market works, how the market moves, and wait for their setups and wait for their actual setups to present itself. They don't just get in on the market like that. They have their rules and all of that. They have their rules, everything, and they get in on the market when the market gives them reason to enter the market. So that was, by the way, this is how the market moves, and the market is gonna pull back again. Sometimes this one is just gonna move to the downside, or it's gonna move. It's gonna be a very long. It's gonna sell to the downside rapidly, or sometimes it's gonna be slow. So the market is gonna pull back again to the upside. Previous supports, this is how a random market is. This is how the market is. This is support, and then what are we expecting now? We're expecting traditional markets. We are expecting a new low because the market is on a downside. So when the market is on a steady downtrend, this is how the market moves. When the market is on a downtrend, this is how the market moves. We call this low, we call this high, call this low, call this high, we call this low. So this was a low. The market made a low, and make a lower high right here. This is a lower high. I make a new low, lower lows, and made a lower highs, lower lows. This is the recent low, a new low. So let's get it again. The market was in a steady downtrend, saw a little bit of the support right here. The market retraced to the upside, or the market pulled back to the upside and made a new high. This new high failed to break this previous low, right? This new high failed to break this previous high, right? Okay, let me just put in a barrier, kind of like a barrier or a structure or a support, resistance, anyhow you want to call it. So this was where the market started, and the market was in a downtrend. We all know the market is on a downtrend. So many traders, big banks, the big banks, and the hedge funds, and other organizations who are involved in the markets. They're selling the market, professional traders, and all of that. So the market pulled back to the upside, and then this little support was broken, clearing the retail traders out. and this was a high, right? This high didn't go over, didn't go to the upside, it didn't retrace to the upside, but it went low, broke the previous low. This was a low right here. It was a low right here. The market broke this low and then stopped at this region and found found a resistance at the previous low. You know, this was a low. This, when the market breached this low, this is no longer a low again. So this is a high, and this is a low, and this is a high. So we call this a lower low, a lower highs, lower lows, lower highs, lower lows. So that's how the market moves, and that's how the market is a random market like that. You know, we will always see corrections and all of that. We always see market corrections, and market is gonna pull back and go to its actual direction. But however, in some scenarios or in some cases, when the market, in some cases, when the market breaches the previous low like this, sometimes the market breaches the previous low, like this, there was a low right here, and the market breached that low, you know, breached that low, and test that low again, maybe before it moves to the upside. This is how the market moves, and this is what we call the shoulder, the head, shoulder. Head and shoulder normally happens when the market is at its peak. If market is at a peak high or a peak low, we normally see head and shoulder most of the time. Not all the time, not saying all the time, but most of the time we see head and shoulder, or we see large double tops and double bottoms, larger ones, not the smaller ones. Large double tops and double bottoms, large ones, the larger double tops, when the market is at the peak high or peak low. We normally see something like this, you know, in the market. We normally see things like that in the market. But most of the time, what we see the market is a head and shoulder, because the market is gonna act like it's still gonna continue to the downside. Those traders who are just trying to get in late, so and maybe they bring in their emotion to the market and say the market keeps going down. I just want to sell right here. I want to sell. I want to sell. The market makers know about all the orders. They know about the buying and selling. You know, they see all the orders, so they know how to trap traders. They know how to trap all these traders. So maybe traders who just got in late in the market, they will just want to say, this market is gonna keep selling. Let me get in on the market now and sell and make a quick box and get out the market. And the market decides to correct, breaking the previous low. Remember, like I said, this was the previous low. The market broke that previous low, tested that low, gave us what we call a head and shoulder. So this is the shoulder, this is the left shoulder, this is the head, and this is the right shoulder, and then correction to the upside. Bang. So that's how the market moves. And then you can also see a new high right here, low, and a new high right here, a low right here, correction. That's how the market goes: high, low, high, low, high, low. So higher high, so high, higher low, higher highs, higher lows, higher highs, low, lower highs, lower lows, lower highs, lower lows. So that's how the market is. I'm gonna show you guys in the actual charts. Let's go to the actual charts and look for something like that. So this is the Euro USD daily charts. So we can see the market was on a downtrend. Let me use this. The market was on a downtrend, gave us a low, and the market pulled back, gave us a high. The market gave us another low, pulled back, gave us a high. Another low. You can notice this low did not, you can notice you can notice why this why the heuristic went up is because you can see this low right here didn't breach this low. So this low right here didn't breach this low. If this low had breached this previous low, and then we would have seen the market continue to the downside. But what happened? The market made a correction to the upside. We have seen, let me just quickly put this here and then also highlight this. So we had a downtrend, the market was going in a downtrend. The market went on a downtrend and they gave us a new high. This high didn't break this high, right? So gave us a low and gave us a high, gave us a low and then gave us a high, and then the market sold again, but this low did not break this low, didn't break the previous low. The market went to the upside again, gave us a low, went to the upside again. This high didn't breach this previous high. There was a high right here, and we did, and the high was not breached. So this is that. This is this. So what does this suggest? It suggests that we are still in a downtrend, that this is still a high right here. This is still a high. This high did not breach this high. Okay? This is still a low. A low still holds. In the longer term, the market will not just go lower lows, lower highs, higher lows, just like that. It's gonna stall. Sometimes the market is gonna range. It's gonna go into some consolidation phases. It's gonna range. It's gonna trend. It's gonna track traders. So many things will just happen in the market. Disasters. Currencies. Things like that. Fundamentals are gonna take place. Are gonna get involved and stuff like that. So that's why the market is not just gonna. You don't just enter the market and say, "Oh, the market is just gonna give me this." We get all what we want when we analyze our chart. So the market gave us a high, and this high right here didn't breach this high. That's why we didn't get the market going to the upside. Instead, the market returned to the downside, and gave us a new high. This new high, did it breach this high? It did not. I'm gonna highlight that. This new high did not breach this previous high. Okay, it didn't, and the market dropped. Okay, so the market gave us a lower highs, lower lows. These lows found a support, found a support and bounced off of that support. Okay, I went to the upside again. Did this high breach this high? It did not breach that high. So we are still on a steady downtrend. Okay, so we have a low right here, a lower highs, lower highs, and then what did we get again? We had the market to go into the downside. Okay, the market went to the downside, breaking these lows, and some people would have sold the market right here. due to their own confluences and analysis they have carried out. They have sold the market here. Okay, and sometimes, like I said, the market is always gonna fake you out. Some people would have just sold because there was a low right here. There was a low of 216 and about 06, 27 and 10, about 4 months low, got bridge and candle closed below. So some people would have just sold the market and you know things like that, but the market decided to fake people out and go to the upside. So okay, what did we have again? We also had a high here again. Okay, let me take this one out. We had a high here again, and then the market came back. The market makers are just gonna do things, crazy things. Gave us low and even cleared a lot of stop loss. Stop loss got cleared. People got cleared. People accounts were gone and things like that due to some certain factors, maybe fundamental factors and all of that. And then the market dropped. Like I said, the market was in a downtrend, just went into some consolidation, but you can always, as a retail trader, you always go to the 4-hour time frame or a lower time frame to find entry points and get, because even when I calculate all these moves the market is making, this is about 300 p move. Okay, how many pips is this? It's about 200 p move and all of that. So you always go to the lower time frames to find an entry point and get in on the market. So as long as we know that the market was on a steady downtrend, okay, as long as we know that the market was on a steady downtrend, and then what happened as these lows got breached. So this particular low, I'm gonna place this one right here. I know we still have a support right here. I'm still gonna put that. But I'm gonna put this right here at this low. So the market broke, markets went to the downside. And what did the market give us? The market gave us a high. So now we have a low. We have a low, we have a high. So we have a low right here and we have a high. This high was our previous support turns into resistance and the market dropped. Okay, market dropped. So we have lower lows, lower highs, lower lows. New lows at this region. Okay, we have a new lows at this region. So some traders, some emotional traders, will always want to get in to sell the market. Oh, this currency pair is still going down, it's still plummeting, it's still going to the downside. Let me get in, let me sell the market right here and make profit, and the market decides to reverse. Okay, the market decides to go up, and we had this, and we had this. So what is this? We have a left shoulder, we have a head, and we have a right shoulder. So we have a head and shoulder pattern being presented on the daily time frame, telling us that we might likely get a trend reversal in the market. So you can see what happened. You can see this is how the market moves, and then we had a steady uptrend, new lows. Okay, lows, new highs, market breach, giving us a new highs, testing our previous support. My bad, yeah, testing our previous support. breaking, breaking the resistance, testing our previous support right here, and then we have a pullback, retail traders controlling the market, and the market makers coming into the market again and moving the market to the upside. Okay, clearing everyone who were inside the market at this point. And then we have a steady uptrend. Market pull back again. So this is what we have. This is what we have. We have a high, a low. This low, did it break this low? It did not break this low. So we can expect a continuation to the downside if because this is a low. Excuse me, let me bring in my Fibonacci retracement and see what okay. So we have, did this low, did it break this previous low? It did not break the previous low, so we can't still expect the market to continue to the downside. We know that the market has, that the trend has changed due to certain things that were present to us. We had a shoulder, we had the head and the shoulder. We had the head and shoulder pattern, and then new highs. We had a high right here, a low, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, higher highs, higher lows. Then high. Again, we might likely get a trend correction because we have head and shoulder being presented again. You can see the head and shoulder. This is the shoulder, this is the head, and this is the shoulder being presented. Sometimes head and shoulders they are invalid. Sometimes they're invalid. Not everything is perfect. So we had a head and shoulder at we don't know what happened, but the market does decide to still continue to the upside, and then we might likely even get to the upside again. Okay, so that's how the market moves. The market is just like that. You just have to find your entry points, use your confluences and all of that, and get in on the market. So I have showed you guys what I explained on the real-time chart. You can go over to maybe the GBP, USD, any currency pair. You always find this. You always find series of lower highs, lower lows, and all of that. You find head and shoulders where market is at its peak, and some other things, and then that's that. So I'm gonna do a video on Fibonacci retracement, how to get in on all these currency pairs, how to get in on the low, how to buy the low, how to sell the highs. Okay, thank you.